Hey everyone, welcome back to Corporate Decoder, the place where we take complex financial documents and make them as clear as mud. Just kidding, we make them super clear, and today we are diving headfirst into the Grayscale Stellar Lumens Trust 10K report. Buckle up because this digital asset report is packed with enough jargon to make your head spin, but we're going to break down what it all means for the folks who invested in this trust. Before we dive too deep, if you love getting these kinds of financial insights directly from the source, make sure you hit that subscribe button. And hey, we've got a rocking community over on Discord where we break down these filings even further. So be sure to join up, link is in the description below. Alright, so what exactly is a 10K? Think of it as a super detailed annual report card for a company, or in this case, a trust filed with the US Securities and Exchange Commission, or CSEC. It gives a comprehensive overview of a company's business financial condition and risks. For Grayscale Stellar Lumens Trust, or GXLM as it is known on the market. This filing covers their performance up to September 2025. So what is this trust all about in a nutshell? It is designed to give investors a way to gain exposure to Stellar Lumens, or XLM, a digital asset. Essentially, the trust holdings XLM and investors buy shares in the trust. It is a passive investment, meaning it doesn't actively trade or manage assets like a typical fund. The goal is for the share price to mirror the value of the XLM it holds. Minus fees, of course. Now here is where it gets interesting. The report states that so far the trust has not met this objective. The shares have traded at both premiums and discounts to the actual value of the XLM, held sometimes by quite a bit. For example, between late 2021 and late 2025, that premium could reach over 460%, meaning investors were sometimes paying way more than the underlying assets were worth. That is a huge red flag for any investment, and the risks are plentiful. The report dedicates a massive chunk to detailing the dangers of investing in digital assets like XLM. It talks about extreme price swings, the evolving nature of blockchain technology, and the fact that this industry is still very new. They even mention the possibility of forks, which on a blockchain is like a split in the road, so to speak, if there is a disagreement on how to update the technology. This can create confusion and impact value. The filing also heavily emphasizes the volatility. It highlights major disruptions in the digital asset world, like the FTX collapse in 2022 and other platform failures and bankruptcies. These events have shaken confidence and caused massive price drops and liquidity problems. This section is basically saying, hey, digital money is wild and unpredictable. Then there is the issue of trading platforms themselves. The report points out that many of these platforms are largely unregulated and lack transparency. This can lead to fraud, market manipulation, or even business failures, all of which can directly harm the value of the digital assets they trade, and consequently, the value of the shares investors hold. Now let's look at some numbers for the year ending September 2025. The trust saw a net increase in net assets of over $30 million. This is a big jump from the previous 2 years, which actually saw decreases in net assets. The big driver here was the appreciation of XLM itself. The price of XLM went from about 10 cents in September 2024 to 37 cents by September 2025. That is a massive jump, and it explains that $30 million gain. Their total assets as of September 2025 were about $43 million. That has grown significantly from about $10 million in 2024 and $8 million in 2023. This growth is directly tied to the rise in XLM prices. The number of shares outstanding has also increased, reflecting new creations of shares probably fueled by that price appreciation. In simple terms, the trust holds around $43 million worth of XLM at the end of September 2025, which is a nice bump from about $10 million at the same time in 2024. The cost to acquire that XLM was considerably lower at around $23 million in 2025. This difference between cost and fair value is where that unrealized gain comes from. And what about the value per S-hair? The principal market NAV per S-hair was around $31 in September 2025, a huge leap from about $8.6 in 2024 and $9.99 in 2023. This per S-hair value is what the trust claims it should be worth based on accounting principles. However, there is that non-GAAP NAV per S-hair, which is derived from the index price, a different calculation method. That number was very close to the US GAAP-based value, sitting at $31 in 2025. But remember what we said earlier about the trust not meeting its objective. The market price for these shares, GXLM, has historically traded at a significant premium or discount to this NAV. So while the NAV might be $31, you could have been paying much more or much less for it on the open market. Now about those auditors, KPMG signed off for the 2025 financials and Markham LLP for 2024. It is important to note that accounting firms have different opinions on how to value these digital assets. Markham even included an emphasis of matter about the risks and uncertainties surrounding XLM holdings, saying the market is immature and subject to significant uncertainties. That is a polite way of saying a lot can go wrong. And then there are the conflicts of interest. The report details how the sponsor DCG and its affiliates are involved in various aspects of the trust and related businesses. This includes DCG having a stake in Kraken, a trading platform used in the index price calculation. It also mentions that Grayscale Securities LLC is the sole authorized participant. The report suggests this setup might not be arm's length, and that the sponsor might favor its own interests over those of the trust shareholders. This is a common theme in crypto-related trusts where the sponsor is deeply intertwined with the ecosystem. This statement is pretty stark. It basically says the creation of new shares isn't happening at fair market value negotiations because the entities involved are all part of the same corporate family. This raises questions about fairness and transparency for investors. So what is the story here? Grayscale Stellar Lumens Trust has seen a substantial boost in its net assets this past year. This is almost entirely thanks to the massive price surge in Stellar Lumens XLM. However, the underlying structure of the trust and its shares still carries significant risks. The report flags extreme volatility, the nascent nature of digital assets, the lack of robust regulation in crypto markets, and crucial conflicts of interest within the sponsor's organization. The fact that the shares often trade far from the actual asset value, and that creation of new shares isn't arm's length, are major concerns. What we're seeing is a trust that has benefited from a rising tide in XLM prices, but it operates within a highly speculative and risky environment with structural issues that could easily lead to significant losses for investors, especially if XLM prices falter or regulatory headwinds increase. It's a classic case of high potential reward coming with extremely high risk. Alright, that is our deep dive into the Grayscale Stellar Lumens Trust 10K filing. What are your thoughts on these numbers and the inherent risks? Do you think the trust structure holds up, or is it a ticking time bomb? Let us know your take in the comments below. If you found this breakdown helpful, do us a favor, hit that like button, it really helps the channel, and of course subscribe for more corporate dissections. Don't forget to join our Discord community, linked in the description for even deeper dives. Thanks for watching, and we'll see you in the next episode.